Hello and welcome to our weekly review of the crypto market. The European Union has recently adopted the world's first comprehensive crypto rules. In the United States, regulators have targeted several crypto exchanges. The meme coin craze continues to take hold of the crypto market. Only now it has switched from a dog theme to an amphibian theme. Crypto coins DOGE and Pepe are now shaking up the market. What's more, Elon Musk has found a new Twitter CEO. The US Securities and Exchange Commission, with Gary Gensler at the helm, has targeted the crypto companies including Bittrex, Coinbase, Kraken, Gemini and Genesis. Gary Gensler has no doubt that cryptocurrencies are securities. This explains why the Commission believes there is no need for separate rules for the crypto industry. The Securities and Exchange Commission chair also reckons that 3 of the 4 failed regional banks were closely tied to digital assets and collapsed precisely because of that. Moreover, cryptocurrencies pose a threat to financial markets. Even if US regulators decided to develop a framework for the regulation of the crypto industry, it could take them years. On the other hand, the lack of clear rules allows the Commission to target more crypto firms and find new violations. This week, one stablecoin showed unprecedented growth. It was XRP, Ripple's native coin. As a reminder, in late 2020, the Securities and Exchange Commission accused Ripple of raising at least $1.38 billion by selling XRP in an unregistered security offering. Since then, Ripple has sought to release documents tied to former Commission Director William Hinman. The other day, the judge ordered the regulator to publish the Hinman files. In a 2018 speech, the former Securities and Exchange Commission director said Ethereum was not a security. After the judge denied the Commission's appeal to prevent the release of the documents, XRP surged by an impressive 10%. Additional support came from an increase in trading volumes and volatility. On Wednesday, XRP rose by 7% to $0.45 per coin after the publication of the Hinman files. In addition, the trading volume of the 6th largest cryptocurrency by market capitalization increased by approximately 83% yesterday. Meanwhile, the DOGE coin surged after Elon Musk's announcement that he had found a new Twitter CEO. What's more, on May 11th, a mysterious crypto trader transferred over 13 million tokens of this meme-inspired cryptocurrency in a series of transactions worth about $927,000 that cost just $0.26 in fees. In addition, the number of transactions in the Dogecoin network exceeded that in the network of Bitcoin and Litecoin. This growth might have come due to DRC-20 tokens, which enable the creation of new digital assets on top of the blockchain. Crypto liquidity is expected to fall within the next few months, particularly if the Federal Reserve continues raising interest rates. Meanwhile, the second largest cryptocurrency by market capitalization, Ethereum, has now advanced by almost 50% since beginning of 2023. Ethereum experienced a significant volatility last week, but its fluctuations were above the level of $1,800. Now it is also resisting sell-side pressure while trying to move higher. If bearish traders come out on top, the cryptocurrency could plummet to $1,687, which served as its support level for the past 2 months. Meanwhile, resistance is seen at the level 1,828 and $1,844. As the US cryptocurrency policy becomes stricter, the popularity of crypto assets in the US market will decline, particularly amid the risk of default and possible economic recession. Bitcoin, for example, saw the number of active addresses drop to 764,000, its lowest level since July 2021. Although transaction volumes have increased, they are mainly due to the hype surrounding BRC20 and ordinals tokens. This situation benefits miners who, for the fifth time in the blockchain history, earn more from transaction fees than from Bitcoin mining. The average transaction fee jumped above $16 last week. It stood at just $2.5 in 2022. The massive amount of spam overloaded the network, increasing transaction times and reducing the number of active wallets as investors switched to other crypto assets. Bitcoin itself has started a correction since Saturday, May 13th. Over the past 7 days, the cryptocurrency has retreated slightly from last Wednesday's high of 27,870. But still managed to stay above the key support level of $27,000. This allowed whales to buy Bitcoin at a discount. Overall, major holders have already accumulated close to 85,000 Bitcoin, but they have not yet been able to reverse the current trend. Some technical indicators suggest that Bitcoin's narrow consolidation is likely to last much longer than a few days. The sideways trend may persist until the end of the second quarter of 2023. With bulls being seemingly idle since the beginning of the year, bearish traders can now push their lead in cryptocurrency below a 27,000 level unobstructed amid falling transaction volume. Market players are now increasingly focused on other tokens such as meme coins. The rising popularity of meme coins has now begun to significantly affect the crypto sector. One such coin, DOGE, has managed to raise more than $3 million in the pre-sale stage. It attracted the attention of market participants by combining the play-to-earn and stake-to-earn models. There is never a dull moment in the cryptocurrency world. This was the weekly crypto market review. See you next time.